in lackluster mode today, and as you can see, Sensex and Nifty both are down around a 0.5%. But which are the sectors which are getting impacted? All the gainers which were there for last 3 days down or in profit booking zone today, whether you talk about auto or you talk about other sectors like retail as well as FMCG. But shifting the focus to apparel industry, where Neeraj Nagpal, the Chief Business Officer, Apparel and Retail, Raymond's Lifestyle, is joining with us. Yes, hi, welcome to ET. Now, my first question to you will be that apparels below 2,500 are now taxed at only 5%. How much of your portfolio falls in this price category, and can this offset some pressure by driving growth in your mid-market or casual wear portfolio?
Absolutely. I mean, the GST rate reduction below 2,500 from 12 to 5% would really amplify consumer demand, especially in the value and the mid-market segment. And in our case, half our portfolio sort of falls in this segment. We see huge amount of demand uptick, especially in the festival season, in the casual wear portfolio, and especially in products like t-shirts and some of the casual shirt and trousers as a portfolio. So we definitely see a positive momentum kicking in with the GST rate reduction.
Yeah, we have seen that positive momentum and cheer already since the announcement of the rate rationalization of GST. But Neeraj, with apparel above 2,500 rupees moving from 12% to 18% GST, how do you see this impacting Raymond's premium as well as formal wear sales?
So the way I see it is that with the GST rate about 2,500 going from 12 to 18%, this will also in some sense add the value growth, and average bill value will go up. We'll still have to sort of cross uh, the festive Diwali and the wedding calendar that follows Diwali to sort of really see the consumer reaction on it. But if I look at purely mathematically, the average bill value would obviously go up, and we'll have to sort of cross, the consumer sentiment during this period.
Also, I want to understand from you, as consumer durables and essentials get cheaper under GST 2.0, household budgets may free up. Do you expect higher discretionary spending and lifestyle apparel as a spillover effect?
I see overall with the discretionary income coming into play with reduction in GST prices, the overall macroeconomic environment should sort of augur well from a discretionary spend. So I definitely see that the overall consumer sentiment would be a lot more positive, and therefore discretionary spend and some of the average bill value with the rate going up should be able to add value growth on the business. And any specific sort of consumer reaction we'll have to sort of see through post the festive. But as far as how the festive momentum has been building, and we now have seen Onam and Puja season sort of playing it well, and we are looking forward to a very, very positive Diwali and a wedding calendar post that.
Mm-hmm. Also, premium fashion has been clubbed with luxury goods under the GST. Does this risk dampening demand in Tier 1 cities, or will aspirational demand remain resilient according to you?
I think given the GST rate reduction across multiple categories, uh, we as business, we feel that it's a very positive step in terms of how GST reduction has happened. So there should be very, very positive macroeconomic conditions sort of playing out, and discretionary spends would definitely see a uptick. Of course, the premium segment clubbed with luxury uh, could be a challenge, but we'll have to see how our festive and the wedding calendar pans out. So to that extent, we are positive from our overall macroeconomic condition, and the GST rate reduction at a overall level. We'll have to find out how it plays out in the festive and the wedding calendar.
All right. Thank you so much with your views, Mr. Nagpal, and all the very best for the festive